I'm joined by Mike Lenhoff. He's Chief Strategist and Head of Research at Brewin Dolphin Securities. There's so much talk, Mike, about actually we're growing or no, we're not growing. There's so much concern about Europe going forward. Are you more worried now that we do risk seeing a double-dip recession than you were 6-7 months ago?
I think the risks have clearly risen, but the way I see it is that what we're really observing is a loss of recovery momentum. You know, if you look at, particularly in the developed economies in the United States in focus, the recovery was quite accelerated, and you know, I would have thought that the pace at which that was proceeding was really unsustainable. And so now all we're seeing, I feel, is just a loss of the recovery momentum, and the economy slowing down. I don't feel we're going into a double dip. I think we will work our way through towards a sustainable expansion. We just need more jobs to be created, but I do think that's coming, given that profitability has been very, very good.
Certainly, there's so much focus on jobs. Mike, what does it mean for your portfolio? We're seeing so much risk aversion, and actually we're seeing so much volatility. Do investors need to come in these markets and think, right, well, I'm going to be in there for at least 1 or 2 years because I have no idea what's going on in the next, 12 months?
Well, I think when you're involved with risk assets, you have to take a decent long-term view, or certainly a medium-term view. The way we're playing it is we, like the CEO of the London Stock Exchange, we're cautiously optimistic. The balance of our asset allocation has been tipped towards the more defensive side. We've been marginally underweight in equities, marginally overweight in bonds, particularly corporate bonds. We've been going for yield in the expectation that companies, as I said earlier, will have the wherewithal from their profitability to distribute some of that in the form of dividends. And we're just waiting until we get through this very, very difficult period. So we're looking for value and trying to position ourselves accordingly.
When you're talking to me about cautiously optimistic, does it mean that we're going to see actually a big correction on most European indices?
Well, we have. This year has really been unusually, or certainly more volatile than I think many had expected. You know, we've seen a year of consolidation after such a great year last year. And clearly it was unrealistic to expect a repeat of last year. So I think we're just going to be faced with a period of something very similar for the balance of this year that we've already experienced. And I think we just have to look for situations that offer good value, the prospects of good dividend growth, and wait until we actually go through this period of loss of recovery momentum, and hopefully towards a sustainable expansion, which I do believe is coming along, given the policy,
Mike,
overall thrust of policy, and so on.
Thank you so much.